You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you're doing well on this Wednesday. Hey, there is never a dull moment on the stock market, right? So yesterday, after the market closed, before the market closed, got the notification that both National Bank and Canadian Western Bank share were halted pending news. So there was something brewing over there. And a few minutes later, we knew that National Bank agreed to buy Canadian Western Bank for $5 billion. So today we're going to review this deal. I'm going to focus a little bit more about the play and what I think about it, because you can get the rest of the news everywhere, but I'm pretty sure that you want to have my take because National Bank is my favorite bank. It's one of my largest holding. I've worked there for 13 years. So definitely I do have a t-shirt of National Bank. No, I don't. But seriously, I would wear one. And it's as much as I like this business. So let's get on with the number quickly, and then we're going to go with the strategic move and what I think about it. So Canadian Western Bank, definitely not one of my favorite bank, mostly because it's not diversified. It is a classic savings and loan banks, mainly focused in Western. So BC, 33% of their loans are in BC, 29% in Alberta, and then 25% in Ontario. So most of it, it's like half of the business is in Western Canada and a little bit in Ontario, and then the rest in other provinces. It has 37 billion in loans. It's the eighth largest loan book in Canada. But the thing that I didn't like about it, it's not that it's doing that bad, but the problem is when you look at other banks, it's a small one, market capitalization around like 2.5 million. So of course there is a premium, like 110% premium. So if you are a shareholder of Canadian Western Bank today, you are finally getting your money back, which is, pretty good for you. So good for you. You're going to get your money back for the past like 3-4 years that has been rough. You're going to get paid for that, so congrats to you. So the revenue trend is going up, so that's great. They're doing a good job with their loan portfolio, but the earnings have been kind of like a downtrend since 2022, which is kind of normal because as interest rate rose, we had higher provision for credit losses. So a lot of banks had to got affected by this because it's a smaller bank than the others. Of course, it's also having a bigger impact. So overall, I was not in love with that bank. I would have not invested in it, mostly because there are like better opportunities. But for National Bank, it makes a lot of sense. But before we go to that reason, just want to tell you it's a stock for stock deal. So you're going to get shares of National Bank priced for to get like a value of like $52 a share for Canadian Western Bank. So as I said, 110 premium. So you're going to like more than double your money. So that's great. And to do that, National Bank will have to issue $500 million worth of share and then get another investment of $500 million by CDPQ, la Caisse de dépôt et placement du Québec. And that's the second largest investor for National Bank, CDPQ. So of course, as a shareholder today, the market is not open yet at the time of recording. I don't expect a good day on the market. We're talking about share dilution, even though it's a good news for the long term. The classic is when a company announces that they will make a major acquisition, that company's stock is going down while the other one is going up. So I expect CWB to, of course, have a great bump. If it's not reaching that $52, you may have an opportunity there to buy a few shares and hope that if the deal closes, you're gonna like cash that like that difference between whatever the stock goes up and the closing price. However, keep in mind, there's always a possibility that regulators says, no way, Jose. I don't think it's going to happen because it's going to, yes, improve National Bank's business book and loan book, but in the end, we're talking about like a small bank, like 2.5 billion, mostly in the Western. So National Bank is not really there. So that's one of like the strategic move here is to expand their exposure to Western Canada. So it's not going to reduce competition really that much. It's actually going to strengthen it and offer maybe like better service and better prices for customers, because National Bank will go in the West with more resources to fight against the big five. So maybe the regulator will see it the way I see it, but I don't see a big problem here. I think it will likely going to happen. So maybe there's an opportunity there. We'll see when the market opens. So keep your eyes on it. Of course, it's not financial advice. It's not even something that I will necessarily consider, but I'm just telling you, if you want to dig a little bit deeper and see if it's worth the risk, well, this is a play that you could do. I did that with Activision Blizzard back then when Microsoft offered to buy it. So anyways, food for thought, my dear Moose. Now, let's get on to what is really interesting and what is my take on National Bank buying CWB. First thing, strategic exposure to the West is very, very smart. First, they are getting a huge loan book on the commercial side. So CWB has 37 billion in loans, and 30 billion out of the 37 is commercial loans. What is great about that is the opportunity to cross-selling across other services. National Bank has been incredibly good at doing that commercial business, so doing loans, offering great services, and being there for those entrepreneurs. And you know why? Because those entrepreneurs, one day, they will sell their business. And when they sell, there's always a private banker working at 1859, Private Banking 1859, the wealth management division for National Bank, that has been already providing service and already been working with the business owner before he has more than $1 million to invest. I know that because I used to do that job. So my job was to take care of those entrepreneurs before they become like multi-millionaires. So some of them were millionaires, but like not super high rich. And then when they cash in, the relationship is already there. So the link between commercial and wealth management is huge. So that is like one thing that is going to be great for National Bank. The second one is, of course, the exposure, the footprint in Western Canada. So getting more branches, more exposure in BC and Alberta. There's a lot of money going on there, and National Bank had an expansion there. It was already part of their strategy. So now it's just boosting what they were already doing. So again, very smart. And the bank expects to generate synergy of 270 million by the next 3 years. So because they are already doing this, because they can share some departments, they will save money by making that acquisition of CWB. So they will improve their margin, make more profit, get a better exposure to the West, get a better possibility of getting commercial clients. Yeah, see, you even got Moose that got excited about the news now. Sorry about that, guys. So commercial with wealth business makes a huge advantage for National Bank. And the other thing that I really like about that is they already know how to manage super regional banks. It's part of their DNA. So National Bank started as an important bank in Quebec. They did the same trick in Cambodia, buying like ABA Bank and running it as it was a super regional bank. And now they're doing the same thing with CWB. So they have that expertise. It's a business model that they know how to operate. So of course, the price is steep. CWB was trading at a forward PE ratio of 7, which was definitely low. But when you're adding like that 110 premium, you're paying more than 14 times the earnings. Yes, that is steep for a bank. To give you an idea, National Bank is the best performing bank, and it's trading at a PE ratio between 11 and 12. So paying 14 times the earnings, probably a bit, you have to pay a premium to make everybody happy, right? So that's probably exactly why it's happening this way. Overall, I think it's a really strong deal for the long term, though. So it's similar to when Canadian Pacific bought Kansas City Southern. It was a huge price to pay, but there's not that many possibilities in terms of assets to buy in Canada. So I think National Bank is doing the right move. Funny thought, just before I let you go, National Bank yesterday at closing was showing a market cap close to $40 billion, so 39.5. The funny thought is CIBC is now showing a market cap of 62 billion. So maybe that in a few years from now, we're going to talk about the big five and we are going to ignore CIBC and National Bank will be there and I will be able to stop talking about the big six. All right, Moose, that was just my joke of the day because I'm like super proud of this bank, super excited as a shareholder, but I don't expect to see the share price going up today. Actually, it's a smart move to do a stock for a stock deal because National Bank stock has been soaring over the past few years. Best performing banks, besides Equitable Bank, but that's another story. So yeah, definitely, I'm super happy about this news. I'm looking forward to see how it's going to play out. And in the meantime, well, we're going to talk tomorrow. We're going to continue to follow the market. It's always an exciting moment. And I wish you well. So dear Moose, don't forget to give me a 5-star rating if you love this podcast on Spotify and Apple Podcasts. And we're going to talk again tomorrow. Until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.